The malady of the money tunnel vision. What happens when money-related problems multiply in your life? You let your anxieties build up. You begin to overfocus on the short term. That means you are tunneling. Go on like this and you are sure to suffer from the malady of the money tunnel vision. Called so because you squeeze your vision when hit by monetary anxieties. You dive deeper into your immediate fears. You tend to turn short-termish. You refuse to think long. You morph for the worse. As you get panicky, the panic results in jitters. You resort to distress selling in the stock market. Is there a way out of this tunnel? Yes, there is. Think long, keep cool, and hope for the best. Long vision is better than a short peep. Money turbulence can be terribly upsetting. It can drive you into depression. Helpless, you draw then into a shell. Here is the real way out. Look far, look wide. Work positively towards a financial goal. Have a long-term approach. Bull and bear markets alternate. So do good in bad times. Do not get bogged down in depressive spells. Bank credit may turn more expensive, consumer inflation may soar, cost of living may turn more taxing, and savings may dwindle. You may not be able to invest anything for the morrow. Fret not. Do not let jitters get the better of you. When jittery, you are bound to make terrible money mistakes. Worse, you may turn inactive and do nothing worthwhile. However bad is the situation, do not deplete your nest eggs. You may stop adding to your savings pot, but do not start drawing from accumulated reserves. However, short-run creeps and jitters can also make you a cautious spender. To that extent, they are okay. However, do not turn too cautious and dive into distressful deals, like panic sale of long-term assets. Whatever, cut off redundant expenses. Think long. Apply this rule to your savings and investments, to your stocks and mutual funds. Do not scurry into a bomb shelter when it is just a passing thunder and lightning. Instead, slash your discretionary expenses. Dumping discretionary spending is a better part of your financial valor. Whatever is the compulsion, do not abstain from investing. Ceasing to invest would mean frittering away your savings. That is why systematic investment plans are good all-weather plans. When times are testing, do not liquidate your investments and do not redeem your mutual fund units. Money evokes intense emotions. That does not mean you get too emotional, too cautious, and begin destroying your nest eggs. Fear of the future can cripple. But do not let it become catastrophic for your long-term assets. At the same time, know your risk appetite. Keep balancing your risks with returns from long-term investments. It is essential you cut the clutter everywhere, in your expenses, investments, and money. Think. Avoid reading too many money advices. Instead, read case studies and real-life stories of those who rode financial storms in the past. Talk to people about their money experiences. Draw your own inferences and apply them to your money. Avoid stress at all times. Stress can cloud your thinking. It can steer you to take wrong impulsive decisions. Stress can make your existing problems more serious. Your money needs your composure for safety. Being composed will keep you away from what looks like a terrifying money tunnel.